The Australian Financial Review.
Hello, I'm James Thompson, Senior Chanticleer columnist at the AFR. Welcome to our weekly news breakdown of all things business, finance and markets. With me today, as always, is my Chanticleer colleague, the man who has to pedal very hard to meet his consensus forecasts. It's Anthony McDonald. How are you, Anthony?
Not quite growing earnings at 39% a year, James, like Pro Medicus.
Fantastic. Well, this week we bring you the highlights from a whopper few days of company results. We discuss why Michele Bullock seemed a little bit crabby on RBA rates day, and we debate whether CEOs should be getting paid double time for working on Christmas Day. But first, Anthony, let's start with the week's most unexpected story. A Sydney fund manager who shot to some prominence last year pled guilty this week to 2 counts of insider trading. ASIC said he'd stolen information from the chairman of Regal Partners, which is an ASX-listed company, and used it to profit from shares in another fund manager, Platinum Asset Management. Anthony, this is a bit of a bizarre one that came out of left field. Can you tell us what's happened here?
James, this is a ripping story. I've never seen anything like it. This is the way that ASIC tells it, right? The information that's out there, I mean, that's from the ASIC documents. Rodney Forest has pled guilty to 2 counts this week. So Forest was an investment advisor to Regal Partners chairman Michael Cole.
Gotcha.
So he was in this bloke Michael Cole's office for a meeting or something last August. Cole went out to meet someone else. Forest stayed behind, and he logged into the chairman's computer, searched his emails, and found a confidential email with 2 attachments. Now, James, he took out his phone, photographed a slide deck that was on that email that outlined a proposed bid that Regal was going to make for Platinum, had the price and the timing of the whole potential deal.
Oh, yeah.
And he bought Platinum shares and encouraged a handful of other people to buy Platinum shares too. So this was Regal going to buy Platinum Asset Management. So normally when you get one company trying to buy another, the company who gets the bid, their shares go up, right? So It looks like a bit of a quick money-making scheme. Anyway, a few weeks passed and there was still no news of any bid and no real movement in the share price. And according to these documents, Forrest was in the background trying to tip off street talk here at the Fin Review about the deal. And, presumably you write something, the deal news gets out and the share price goes up and that's when you make your money. But anyway, eventually Street Talk did write something relying on information from multiple sources. And sure enough, the bid got disclosed, the share price went up and Forrest sold out to make about a $309,000 profit. Now, James, this is pretty blatant and pretty brazen stuff.
On the surface, yeah.
Yeah, like we must stress. I mean, we haven't heard from Forrest, but he has pled guilty. He cooperated with the investigation. He could be sent to jail for this, as has been reported this week. I mean, he's also been charged for giving investment advice without a license to that chairman, Michael Cole, and someone else as well. Now, James, the reason this was such a shock, just apart from the sort of brazenness of it all, is that you might remember there's a fund manager called Perpetual, which was going through some real tough times last year, all these questions about its strategy. It wasted all this money on acquisition of a rival called Pendulum, all that sort of stuff.
Yep.
Anyway, through it all, there was this bloke called Rodney Forest who was putting his hand up to try and become a director of Perpetual to change the strategy and save the day at Perpetual.
Oh,
Meanwhile, there's this going on in the background. So, I mean, at the time, we thought it was a bit weird that this guy was putting his hand up to save Perpetual, and we ignored him a fair bit, and because the story never really quite added up, did it? But anyway, it now just looks like a real parody of an insider trading case, and all to make $309,000, James. It's just bizarre, isn't it?
Yeah. Anthony, I mean, stepping back from the case, does it say something about, the sort of world we live in? Everyone's on Twitter. You attach something capital to your name and all of a sudden you're a fund manager. Does this say something about the sort of the danger of appearances? Just because you talk like a fund manager and you've got the title fund manager, you're not necessarily someone who should be trusted with money.
Yep.
So It's a pretty ugly story, and a lot of betrayed people out there, I guess. We'll watch where it goes from now with interest.
Yeah, James, and probably the biggest talking point of this week, or perhaps it was the biggest laughing point, was the story that kicked the week off on Monday. The splash of the AFR was about workplace culture and the banks cracking down to be a bit more like our mate John Stanky from AT&T, who we spoke about last week. He was the guy that was telling workers they're basically units of labour, not members of the family, as companies sometimes like to tell us. Now, James, apparently Westpac boss Anthony Miller is trying to shake up the place. That's fair. That's what a new CEO does, come in, shake it up. And he's doing it by scheduling calls on weekends, and it even works on Christmas Day. James, do you believe him?
Well, my mail, Anthony, is this is a bit of a joke that went wrong.
Uh-huh.
So Anthony Miller was, saying that on Christmas Day had his dad over, and he said as a joke, Dad spent half the day grilling me so hard on how I was going to fix Westpac that it felt like I was doing a day's work. Somehow that has become, it's sort of taken on a life of its own to the point where, everybody, there's this sort of narrative going around that, Anthony Miller's so hardworking, he even works on Christmas Day. Now, I can sympathise with him. Sometimes family Christmas does feel like a bit of hard work. But look, I think this sort of strange contest to be who can be seen to work the hardest is a bit odd, really. Now, look, occasionally someone who's getting paid $8 million or whatever Anthony Miller's getting paid, and his top executives, they'll need to do a bit of work on the weekend. There might be some crisis or some customer issue that needs to come up. I think that's totally fine, but doesn't really go for the whole work smarter, not harder thing. And I don't think investors are going out there saying, oh, geez, if Anthony Miller's not working on the weekends, I'm going to mark him down a bit. These jobs are not just full-time, they're full-on. So being a bank CEO, I think, most CEOs really would say they're on call 24/7. Doesn't mean they're working all the time, but they've got to be ready to and willing to pick up the phone and deal with whatever comes. I think, Anthony, the interesting shift here is the tone, the shift in tone. As we talked about with John Stanky last week, it's not so much, you must work harder. I think we go through those cycles from CEOs when, the economy slows and there's a bit of cost cutting. But to me, I think it's fused with what else is happening in the world. We're seeing this rise of AI. We've spoken to a lot of CEOs this week, and we'll get to this in a bit, where AI is being used not just in experiments, but in real life situations where you can see, extrapolate 18 months forward, and there could be a lot of jobs that these companies can get rid of. I think this is all fused in with it. It'll be interesting to see we could see some real divergence in culture. We could see some CEOs who really want to ride their people hard and get the most out of them. Other CEOs, I reckon, will go the other way and say, look, we're embracing hybrid work. We want to be flexible. Yes, we need high performance culture, but there's different ways to get it. So I think the Australian market could split a bit, I reckon. Is that a fair assumption? Are you in the work on Christmas Day camp or in the work smarter camp?
Well, I'm hoping that AI is going to mean no one has to work Christmas Day, James.
True.
Isn't that what we're trying to achieve here?
Yeah.
I mean, I tend to agree with you. This sounds like a bit of a yarn that just spun out of control. No one's accusing Anthony Miller of being a slacker. I mean, he was a partner at Goldman Sachs. It doesn't come much more hardcore than that. I think the bloke clearly knows how to work. And last year, he'd just taken control of Westpac. And, he made a point, didn't he, of saying he wasn't going on holidays or anything last summer because he wanted to work through and make sure the bank hit the ground running under his watch. I don't know, James. Like it feels like it's splitting. I agree with you. It does feel like you are getting some companies who are very happy down the flexible route, and they're telling their staff they can work from home forever, and that's okay. And then on the other side, you are getting some of these bosses speak out. Like, it'll all work itself out in time, James, because at the end of the day, I mean, CEOs have got 3 stakeholder groups to really look after. Employees is one of them. And, if they start treating their employees terribly, the employees are just going to vote with their feet. It's pretty simple.
Yeah. And I think you got to realise that the situation. And, I always like to imagine the pendulum. We always swing the pendulum a little bit too far. Sometimes it's on purpose, though. ANZ and Westpac, they have been sort of lagging behind CBA. So you can see the CEOs just swinging the pendulum a little bit further than you might otherwise swing it to say, hey, we're playing catch up here, and we need to really improve the way we operate. We need to get faster. We need to get smarter. We need to all sort of wake up a bit. I think that maybe it's a bit of initial messaging from these two, and it sort of fades over time. So, but it's interesting. I think as the economy slows, AI rises, the tone from the top is going to change. So let's see how that plays out.
Quick question for you, James. If someone calls you on Christmas Day with a hot story, what are you doing?
I'm answering the phone, of course.
Exactly, mate. I guess it's simple, isn't it?
All right, Anthony, let's get to our first topic of the week. And on Tuesday, the RBA shocked exactly no one by cutting interest rates by 0.25% to 3.6%, giving mortgage holders across the country a bit of mid-year relief. But Anthony, the big cut actually wasn't the big story here, because the RBA also downgraded its forecasts for both productivity growth and for economic growth. Now, the Treasurer Jim Chalmers welcomed the cut, but Anthony, do you reckon he would have been quite as excited about the RBA's message on productivity and economic growth, given we're going to this economic roundtable in just a few days?
Very interesting, this one, James. Like alongside of that, the release of the interest rates decision, you also get the quarterly statement on monetary policy, which is the Bible for economic data. And basically, for anyone that hasn't seen it, you get an overview. It's quite a big document, say 70 pages. You get an overview at the front, which is, a couple of pages of what's going on in the world. And then you get this table of economic forecasts. And that's what everyone looks at to sort of do their own forecasts around. And it's basically got the RBA's expectations of GDP growth, inflation, unemployment, all that sort of stuff in there. And it tells you where the RBA thinks the economy's going to go. Now, they release this every quarter, and it always comes out on rates day.
Yep.
And to do it, they have a bit of a lockup for journalists, where journalists go along and you get a chance to read it, and RBA staff talk to you about it, and they sort of write their stories off it. Anyway, straight away, the journos this time around, they pick up there'd been a change in this productivity assumption. It was a talking point in the lockup. The RBA used to assume that productivity would be running at 1%. They've wound it back to 0.7%. And they did it because they were frustrated that their economic forecasts basically weren't coming true. They were sort of under-egging unemployment, over-egging GDP growth, and they thought the swing factor in both of those things was productivity not going as well as expected. Anyway, so the journos go out of their lockup into the press conference. Michele Bullock starts off, pretty bubbly.
She's cutting.
She had a rate cut. Exactly.
Yeah,
who doesn't want a rate
news.
cut? The Treasurer wants a rate cut. Borrowers want a rate cut. Rate cut's great for the economy. But then the productivity questions started rolling in. First one, second one, third one, fourth one, all the productivity questions. And it got to the point where Michele Bullock literally said, hang on, the story here is not productivity. The story is not this productivity assumption we make. It's the rate cut. It's rate cuts, guys. Anyway, more productivity questions. And she tried to sort of change the direction of it all by focusing on the rate cuts. So there's clearly, some sort of tension here. And I mean, the journos, you can't blame them for focusing on the productivity, James, because, we spoke about it last week. Everyone was tipping a 25 basis point rate cut, right? And we've got the economic roundtable next week. Productivity's hot on the agenda. RBA's changed its productivity assumption. I mean, if you were a journo and you call back into the office and say you've got a story about a 25 basis point rate cut on Tuesday Arvo, the editor will fall asleep on the phone. It's like, give us something new. What's actually happened?
Yeah.
And what happened was the productivity change, James. But for Jim Chalmers and for the government, it's not a good story, is it?
No.
If they're downgrading their productivity assumptions, that doesn't speak boom times for the economy.
Indeed.
Now, James, obviously there's the economic roundtable next week. Michele Bullock, she's going to be the first speaker on the first morning of the roundtable that starts in Canberra on Tuesday. What do you think she'll say?
Oh, well, I don't think she'll walk in there and slam the table and say, productivity stinks, you guys. But I guess we do need to think about how productivity relates to Michele Bullock's job, right? So if productivity is lower than expected, that means that when the economy starts to heat up and grow a little bit, the rate at which inflation starts going up actually kicks in at a lower level than it might have been. So low productivity means higher inflation in Michele Bullock's world. So it's a real problem, and it is really connected to interest rates. If we can't get productivity up, then interest rates are probably going to have to stay higher. That's the message Michele Bullock should be going into. I don't think she'll catch it in those terms, but it is the great challenge. The RBA's got one tool: interest rates. If the government and business aren't doing the job on productivity, then Bullock can't use that tool as effectively as she might otherwise be able to. So that to me is the essential problem. If you can't get productivity up, then interest rates will have to run higher than they might otherwise ordinarily do, and the capacity of the economy to grow is lower than it should be. That's the message that she should be going in with, and I think that's a pretty brutal message. But in some ways, the fact that we're having the roundtable at all is a sort of acknowledgement of that fact. Everybody knows that if we don't get our act together, the next generation is going to be worse off than their parents. That's what this is all about. And that comes back to productivity and investment and all those important things. So Bullock can really go in and set the scene. I hope she does. She's not the table thumping type, but she hopefully the message is pretty clear. The RBA needs your help here. The RBA needs this roundtable's help.
That's the other thing she was stressing at the press conference, James. She's like, productivity, we're just a watcher in the productivity.
Yeah.
The whole thing, like we have, like you said, they have a tool, it's interest rates, monetary policy. They are an observer as much as anyone. But she said she's going in there, she's going to open the batting and just, set the scene for everyone.
Yeah, well, I hope that's what she does. Anthony, given all that, where do we think rates are going next after this week? Are more cuts coming? I mean, it seemed on Tuesday after the decision that everybody was in the camp of there'll be 2 or more cuts still to come over the balance of the next 6 months or so. But then we got some jobs data on Thursday that actually supported your view that we might not need any more cuts.
Well, if you refer back to the Bible, James, a statement of monetary policy, I mean, the RBA, they're assuming a 3.4% cash rate at the end of this year. All right, that's one more cut.
Yep.
They're assuming 3.1% mid next year, right? So that's another cut. That's sort of 2 cuts in the next 12 months. I mean, the market is saying there could be 1.5 to 2 more this year and another 1 or so in the first half of next year. So it's trending towards that 2 to 3 sort of number. So in general, the direction is down. But yeah, like I said, I thought last week, I mean, we might only have just the one left for this year. I mean, what I'm seeing in these results we've had from companies this week, James, and we're going to get to that a little bit later, is most things are going along okay. It's not hot. It's not warm hot either. It's probably just warm. I mean, personally, I'm okay with that. I really think it's important to stamp out this inflation. Michele Bullock tells us every press conference how important it is to stamp out this inflation. It's been incredibly bad for everyday people's lives. Prices are much higher than they were just a few years ago. Those prices are not coming back down. Even if inflation, even if we stamp out the inflation, prices will keep trickling a little bit higher slowly. They're not coming back down. The damage is done. And then you get the jobs data. There is strength in the labour market. You can't dispute that.
Yeah.
Did you see how many new full-time jobs were created in July?
No. How many?
60,500. That's plenty of jobs, right? So there are jobs cuts going around. But I think there was about 40,000 job losses. So net, about 20,000 new jobs created.
Yeah.
Right. And that suggests that there is still some life out there in the economy.
Anthony, I remember talking, during the pandemic when we were raising rates, and everybody would remind us interest rates work with long and variable lags. Yeah. So, often they take 18 months a year to 18 months to really flow through the economy, right?
Yeah. 100%.
The cuts we saw in February and May, they are clearly still working their way through the system. I'm starting to come around to your way of thinking. We saw the NAB's business confidence and business conditions data this week. It just shows that those rate cuts we've already had, they're still bubbling through. They're still helping to lift conditions. Now we've got another one on top of that. I think the RBA is within their rights to wait for a while. They don't want to wait too long if they see signs of softness, but they are within their rights to wait for a while and say, yeah, let's just see what's actually happening here. The question is do they see weakness in the labour market, and in which case they'll need to act? And this week's data says, well, it's not that weak.
So what are you saying, James? One more this year or
done? I don't know. I'm starting to come around to your way of thinking that maybe there's not another one this year. Maybe they wait till February, March next year and just see where things lie then, and that could be the time to provide the cuts. The jobs data is what you need to watch, though. I think that's the key to all of this from here because, yes, inflation is still with us, but it's not growing. It seems to have largely been tamed. So it's all about the jobs market part of their mandate. That's my view. We'll see what happens, I guess.
For our second topic, James, let's give listeners a bit of a peek at what we've pretty much been doing all week, and that's company results. Yes, earnings season, a working Christmas for nerds like us, James, and we've been lucky enough to speak to 20 or more CEOs between us and look at their company's results. James, it's still pretty early in reporting season, but I reckon, as I said, the numbers have generally been pretty solid. The market wasn't expecting a lot in terms of earnings growth, and there's not been a lot of earnings growth on the whole, but big business is performing reasonably well. Balance sheets are in pretty good shape, and the economy is grinding along. But James, let's get into the nitty-gritty. The thing we often love most is the bits and pieces we pick up along the way, the little tidbits, stuff that we didn't already know. So let's give listeners 5 things we learnt from reporting season this week, 5 facts or trends. We'll take it in turns. You go first. Can you tell us something you learnt this week?
Absolutely, Anthony. Well, as that famous meme says, everyone loves a succulent Chinese meal.
Oh, yeah.
But not so much in China. According to Treasury Wine Estates, which obviously has resumed selling Penfolds wine into China in the last year or so, the Chinese banquet, which was a big event, where a company might hold and they'd buy lots of bottles of wine for the table and maybe some for gifts. The Chinese banquet is starting to fade a little bit. The popularity of that is starting to fade. Now, that is good and bad for Treasury. Bad because, obviously they sold a lot of wine into those events, but it's good in that consumption's now going to what we might say is a more normal Western pattern where there's more wine consumed at home. And in the long term, that should actually be pretty good for Treasury Wine Estates. They're not so reliant on lumpy event sales, and they're more reliant on a steady flow. But it's got analysts worried. Is the Chinese economy, souring a little bit or a little bit more? Is the nature of consumption in China changing? What does that mean for Penfold sales? I guess speaking to Tim Ford, the CEO, we sort of came to the conclusion that consumption patterns do change. I mean, it's a little bit before our time, maybe at the very start of our careers, Anthony, the long lunch was a thing. It's not a thing anymore. And so all the wine sales that would have been made at long lunches are well and truly gone and have been replaced in different ways. So these consumption changes can happen, but it's interesting that this is happening in China at a time when Treasury is really relying on ramping up sales of Penfolds into that region. So one to watch.
The long lunch, definitely not a thing at the Miller House on Christmas Day, James.
Absolutely. Good point. All right, your turn.
This one's deep in the weeds, James. I want to talk about the magic of Australian mortgages. You've got to go right into CBA's annual report, page 259. Obviously, someone much smarter and wiser than me pointed this out. James, CBA has to write off a loan when the mortgagee cannot pay the loan for whatever reason, and the CBA takes possession of the house and they can lose money on that loan.
Yeah.
They have to write off what they've lost.
Yep.
Now, CBA is a massive lender, obviously. Wrote off $741 million of loan in the year to June 30. Now, that sounds like a lot of money, James, but remember, it's got about $1 trillion loan book. All right. And the biggest bit of that loan book is home loans. It's got about $710 billion worth of home loans out there. Now, guess what its home loans write-offs were as a proportion of that $710 billion home loan book? And I'll ask you to give it to 2 decimal places.
Oh, 2 decimal places, right. Well, it's usually about between 0.01 and 0.02. So I don't know. I'm going to split the difference. 0.015%.
That's 3 decimal places, but I'll let you get away with it. James, it was 0.00%. 0.00, like zero. Like zero. Like it barely wrote off a home loan in the 12 months to June 30, just gone. What a business. If you're CBA, you borrow money mostly off your customers. Remember, 78% of its funding comes from customer deposits. You pay them, a few percent to borrow that money. Then you lend it out at 5.5% for people to buy their home or an investment property.
Yeah.
And what's your credit risk? Like, zero. Zero. I mean, we live in one of the most overpriced housing markets in the world. A housing market where it costs you, 10, 11, 12 times the median wage. And that's when you have 2 incomes in your house to buy a home.
Yeah.
And our biggest bank is losing 0.00% on home loans.
Magical mortgages indeed. Well done, Anthony.
Mortgages. What's your next one?
All right. So insurance costs have been a massive bugbear for people. Good news. Motor insurance premiums are starting to level off. 12 months ago, they were 14.4%. They're running at about 7.1% according to Suncorp, one of our biggest insurers. The bad news is premiums are going to stay pretty sticky in house insurance, house and contents insurance.
Yeah.
Why?
Yeah.
Well, part of the reason is lithium batteries. Now, Suncorp estimates that in a couple of years, the average Australian household will have 33 lithium-ion batteries in their house. Now, I went, hang on, that's not right. Then you start counting up all the phones and laptops in your house and the power bank and other devices, and you can sort of see where they're coming from. The problem with these batteries is not necessarily that they cause fires, but when there is a fire, it accelerates the fire and the damage is a lot worse. The insurance bill is a lot higher, hence your insurance premiums go up. So one to watch, look after your lithium batteries very carefully, I reckon, Anthony.
Yeah, I got a question for Suncorp boss Steve Johnson next time we speak to him. What's more flammable in the garage? Is it the lithium-ion battery on the leaf blower, or is it the 5-litre jerry can of petrol for the mower?
Good point. Your turn.
I love Car Group, James. That owns car sales. Fascinated by what cars people are buying, why they're buying it, their buying intentions, all that sort of stuff. And from what I hear, if you're listening to this and you're not walking the dog or you're not at the gym, you're probably driving your car around. James, and what's Car seeing? Well, the car sales boss, Cam McIntyre, on his last result, he finished up this week. He says that they do these surveys of buyer intentions, and the intention to buy second-hand cars has increased quite a bit in the past couple of years. So if they surveyed 100 people, 65 of them at the moment would say that they're only looking for a used car.
Wow.
Right? And it's a few years ago it would have been 55%. And he says that's quite a decent shift. Why? It's the cost of living and interest rates. He says people just don't have as much money for the new cars at the moment, so they're looking at the second-hand cars. Yeah. So I don't know. I think that's pretty interesting, James. At a time when we're sort of kicking around EVs, the Chinese EVs that are come in and are going to be cheaper, it turns out more Aussies are sniffing around second-hand cars. Yeah,
fascinating. All right, the last one, Anthony, I think you can probably chime in here too. AI. Obviously, companies know that they've got to tell their investors about how much AI they're using.
Yeah.
I reckon sometimes they're putting a little bit of mayo on it and talking themselves up a bit, but that's okay. My impression here is we are seeing genuine examples of where AI is being used at scale. Telstra, Origin Energy, Suncorp, all using it in customer service extensively to help summarize calls, to help make it easier to keep track of customer records. So, customers not having to explain to 17 different people inside the business what their problem is. The most interesting one I saw is at Origin Energy. Oh, yeah. They have a trial with 25,000 customers where they're getting AI to answer phone calls.
Wow.
The CEO, Frank Calabria, he's cautious about it. He's experimenting with it, but from what he told us, Anthony, he's pretty impressed by the confidence that his team is getting in the AI's ability in a pretty short space of time.
Yeah, it's a fascinating one, AI, James. Like, where it's such an interesting time. If you chat to, Frank Calabria, like you said, at Origin, his head's still in running these big power stations and Araring here in New South Wales. And that's all real physical world stuff, right? Yet you speak to him about the changes in his business and they're really trying to get this AI balance through as well. Like, where it's such an interesting inflection point. We're all trying to work out how the real world and AI come together.
Yeah, I've got no idea of, there's a lot of AI doom out there, and I think people are genuinely worried about it, and for pretty good reasons. But, whether we find a way to muddle through or whether it is sort of a dystopian future, I've got no idea. And anyone who tells you they've got an idea is kidding themselves. But I'm just really interested in that these real world examples are happening, and things that seemed pretty much impossible 12 months ago, like getting AI to answer the phone for 25,000 customers, that's happening now. It's happening right now. And I think if you think through the implications of that for a few years' time, it's pretty damn interesting to think where that might lead us. That's a big topic there, Anthony, but you can see this stuff is happening.
Sure is. Now, James, I just want to throw you a really quick question. Obviously, the big result of the week was CBA. This one came in via the website from Roy, and he says, how has CBA's share price held as high as it has for so long when in the same time frame, the 10 brokers that cover it tell you it should be 100 to 105 bucks, and it's now trading in the high 160s to 170?
I have absolutely no idea, Roy, and neither do any of the brokers. It makes no sense. Our best guess is that a combination of passive flows and superannuation money, maybe even some overseas money, is flowing into this stock as a safe haven. It's pumped it up to well above the valuation it should be. The quality problem is you see CBA's results. They keep executing really, really, really well. They give very few people a reason to sell them, and the thing just keeps going up. So, again, it's a great question, Roy, but it's one to watch.
Yeah, Roy, you're not going mad. It's something that, institutional investors in Australia are really grappling with as well.
Absolutely. All right, we're back after the break. It's a big week next week, and all eyes are on Canberra. Back in a sec. Well, welcome back. If you want to know more about what we're talking about today and a whole lot more, AFR subscribers can sign up to the Chanticleer newsletter at join.afr.com/Chanticleer. Every Saturday morning, the newsletter pulls together the best Chanticleer columns from the week and delivers them straight to your inbox. All right, Anthony, all eyes on Canberra. Tuesday, guests start arriving at 7:30 for an 8 o'clock start, at which time Anthony Albanese will get up and open the Economic Reform Roundtable. How excited are you on a scale of 1 to 10?
11. So glad it's finally here, James. Seriously. Been so much talk about it. Let's get through it and see what happens.
Yeah, it's going to be fascinating. I almost don't know what to expect. Like, you go into these events thinking, they've got 25 people around the table. You expect everyone's sort of talking points and speeches have been well prepared. And, you expect the government's list of outcomes will be well prepared as well, the fix is in type thing. But I don't know. I'm sort of hoping someone derails some of the sessions with some wild ideas and the butcher's paper is flowing and the whiteboards are being scribbled on. I'm probably going to be disappointed, but anyway. Earnings really kicks up a gear this week, Anthony. BHP, CSL and Woodside on Tuesday. James Hardie and Santos on Wednesday. Goodman Group on Thursday. And there's a heap more. It's going to be a big week, right?
It sure will. This week's been a heap of fun, James. It's been great. We've had lots of blue chip companies. It broadens out a bit next week, and then we'll have one more week after that to really drive the results home.
Yeah, absolutely. And the AFR's got its Higher Education Summit in Sydney on Tuesday. It's been a dramatic year for higher education in Australia. And I'm doing the rounds of the Uni Open Days at the moment down here in Melbourne, Anthony, as we try and help our Year 11 kid figure out where he's going. And you sort of think AI, uni, it's hard to know where it all goes, but wow, it's going to be fascinating.
How have the unis changed since you were a young pup, James?
That's a good question. I mean, I think they're probably offering a broader type of course where you can start off a bit more general and then specialise. I think that maybe that's one of the changes. There's a lot more students around. I get the sense, they're doing a lot more business. And I also get the sense that the uni bar might be a little less prominent than it was back in the day as well. But that might not be a bad thing either.
Not as many happy hour posters.
Exactly. Well, Anthony, we love questions on the Chanticleer podcast. This week, our question's from Derek. If you've got a question you want to send in, you can email us at chanticleer@afr.com. You can send an audio question to that email address as well. Just record a voice memo on your phone, include your name and where you're from, and send it through to us. And as we mentioned before, there's the widget on all our Chanticleer articles at afr.com. Derek asks, so his question's about Premier Jacinta Allen and Victoria. As she chases popular politics by pushing a mandate for the right to work from home, do you think that the unintended consequences of this policy will result in much less employment? As it will train employers to be much more comfortable with having remote workers and thereby accelerate the choice of offshoring these positions where possible or moving them to AI agents, as the value of not having a local employee is diminished when they are not present every day. Anthony, I can see where Derek's coming from there. Does the theory stack up?
Yeah, I can see where he's coming from as well. But I'm not sure that question ends on the best note, James, by saying the value of having a local employee is diminished when they're not present every day. I mean, I think there's increasingly we're seeing businesses where just because you're not in the office doesn't mean that you're not present.
Yeah,
right.
Totally.
And I think a lot of the people in the services jobs, the white collar jobs, it's proven they can do their job as effectively when they need to, not being in the office. But he raised some good points. Like, if your face is not required there in front of the boss, do you get forgotten about? Do you become the face of the AI change? I can see those points, and I think that's what we're going to see happen in the next 5 years, isn't it, James?
Yeah, I think that's right. I mean, I think the reason the Allen government's policy seems so misguided is that the market's already found this sort of sweet spot. It's about 2 or 3 days a week, plenty of flexibility. But mixing at-home work when required with in-the-office work when required. So you can contribute to those discussions. So you can catch someone in the kitchen or around the water cooler and share some interesting stuff from your department that you might not otherwise hear, that you can contribute to that culture. So I think it's all a balance. And I think that's the problem with the Allen government's policy, is that it sort of interferes in a world where individual businesses are setting the individual balance for their individual circumstances in a pretty reasonable way. So, yeah, I think your points are well made, Derek, but there is a way through that, and it's all about finding the balance and not being too black or white. Anthony, well, I think we'll be mixing working from home with being chained to our desks next week as we get through these lots of company reports. Love talking to all these CEOs, and hopefully we can find some more goodies in these earnings reports as we did this week.
We definitely will, James. Meanwhile, the economic reform roundtable is going to bubble away in the background.
It's going to be great. Big week. Can't wait to speak to you next week. We'll see you then.
See you, James.
If you like the podcast and you want to hear more, consider sharing or giving the podcast a review, as it helps other listeners find us. And don't forget to follow wherever you get your podcasts. At the Financial Review, we investigate the big stories about markets, business and power. For more, go to afr.com, and you can subscribe to the Financial Review, the daily habit of successful people, at afr.com/subscribe. Chanticleer was hosted by me, James Thompson, and Anthony McDonald. It was produced by Alex Gow. Our theme is by Alex Gow. The head of premium content is Fiona Buffini.
The Australian Financial Review.